Afternoon. No, it's not. It's morning. Afternoon. Good morning. Afternoon. Good evening. How are you all doing? Morning, Peter. Neo, Ian, Christian, Stevie, Fugenia, David, JC. It's time. Nicholas, how are we doing? Jerry, Andres, Amy, John, Tiny. How's everybody? Right. Sorry, not with it this morning. I literally have just sat down. Got back from the gym and sat down. So I have not looked at the charts. I've not looked at anything. We need to go through FOMC. We need to prep for the Euro rate announcement. We need to go through everything that happened. So there's loads to go through. So I'm just trying to think off the cuff, what's the best way to do this morning and trade the open. Bank of Canada. See that. Right. Hang on a minute. Let's organize ourselves. Where are we? 27th. Right. Okay. So, how's everybody? Morning. Servicio. Morning, Marco. Right. Quick recap of yesterday. Indices yesterday, rubbish. Made a 1% loss. Really unlucky with the Dow yesterday. So, made a really nice profit on the open on the Dow. Didn't trade the DAX at all yesterday. So got that opening range break. And the second half, I put a trailer on it. That was the trailer. So it was 70 points. And I thought, I'll leave it on and I'll put my TP up there and see if I can catch the break on the news. So what did it do? It stopped me out. One 5-minute candle stopped me out. And then the news hit that TP. That was $7,500. That was $1,750. Gutted. Anyway, so that's what I got out of the US session yesterday afternoon. The S&P 500 just chopped me. Basically, I got double-ended stop out yesterday on that one, unfortunately, which is why there was only $1,000 loss yesterday. So, but that's all right. So we'll see what happens today with the DAX. Morning, Kennelly. Morning, Shroud. Morning, Gordy. So news-wise, let's cover what we've got today. What's the time? 5:02. So obviously we had FOMC yesterday. We got the rate as expected. We'll have a look at the notes in a minute and just run through that. Market unsure is the best way to describe it, I think. Unsure as to what to make of that yesterday. But this afternoon, we've got the Euro refinancing rate. So this morning, one of two things is going to happen. We're either going to get the reaction to this or we're going to get nothing and wait for that. I suspect we'll go sideways this morning and we'll wait for the rate announcement. The DAX might be a little bit lackluster this morning at the open, but that's going to depend on the stocks, which we need to look at in a minute. So we've got that at 115, which is the main refinancing rate. So there's your interest rate for the euro, which is going to go up to 0.25, up by 0.25 to 4.25. Following that, 15 minutes later, we've got the GDP for the US dollar and the unemployment claims. So we're going to have some volatility enter on the US dollar straight after the euro volatility. And then 15 minutes after that, Lagarde is going to talk, and Lagarde is then going to lay out the forward guidance for the interest rates moving forward for the euro for the next 3 to 6 weeks or so. So that whole thing there is before the New York Open. So the New York Open may well be a little bit lackluster as well today, but we've got a ton of stocks that have had aftermarket announcements yesterday and pre-market announcements this morning for earnings. So it's going to be a really tricky day today to navigate. So be aware of all of that. And then after the market opens, we've got the pending home sales, which do nothing. And then tomorrow we go straight into, at some point in the morning, usually around about somewhere between 2:30 and 4:30 a.m. UK time, we get the Japanese interest rates, which will remain at negative 0.1, because that's what they always do and have done for 6 years. But we were interested in what their outlook report is as to whether they think the economy is going well or badly, and whether or not they think the CPI is going up or down. And we're going to get their CPI figure as well tomorrow morning, which is forecast to go down. So murder, basically, for the next day. We've got 3 minutes to the open. Crude oil came out yesterday, so let's quickly cover crude. So yesterday, basically, I didn't bank anything. I banked 0.12. So I did a little bit of drawdown control. The main problem we've got at the moment is Euro Swiss. Say it's a problem. It's just not much of a problem. It's just what it is. So I'm in Euro Swiss at the moment, and I've had to do a few drawdown controls on it yesterday. So the profit that I got yesterday just pretty much broke even. I got out of the aggressive drawdown control position yesterday with a tiny 0.25% loss. Have literally just re-entered it again this morning. And just going to put the stop on that. I'll give that 0.75 today, 0.75% risk. So I'm going to give that a bit of wiggle room today. Hopefully we get that move on the euro. So today, basically what I'm trying to do with this euro trade is use the news on the euro to let this aggressive drawdown control position basically get me out of Euro Swiss. Yeah. So what I want to do is, the average is now just over an ADR. If we get positive move on the euro today off of either the press conference or the announcement, that will give me a complete out on this. So I'll be able to close the whole lot out in profit and just go, Euro Swiss, you've been a pain in the ass for 2 weeks. Bye-bye. So that's the plan. If we get a negative reaction to the euro, I will get stopped out with 0.75% loss. Yeah. So it's an attempt at an exit on the entire position. Right. Market's about to open. So looking at the DAX, we've got a small gap up into weekly resistance on the DAX. So this is the previous resistance from 2 weeks ago. We've gapped up into that resistance, which is also yesterday's high. Sorry, not yesterday's high, the high of the New York session yesterday on the DAX. So it looks like it's rejecting up there at the moment. We've got a gap fill to the downside, which is tiny. And then upside risks today is literally 2 days ago's high or last week's high. It's this whole area here that we've just not managed to get out of. We're in this wedge at the moment. So we broke down yesterday. We're pulling back. I suspect we're going to start a rally down to here somewhere. But it's all going to depend what happened with the stocks. So there's your open. Your 5/15 minute pre-market opening range is the same. It's that one candle there, and it's just broken short. So that closed too close to the low. I've been watching this new version of the EA running this, being too close to the open. The candle close, basically being too close to the opening range, high or low. I've missed some really big trades because that rule hasn't triggered. So I'm thinking of removing that rule and just accepting the fact that I'm going to get slipped. Nothing you can do about it. So the idea behind this rule that I've got running is in the EA is to stop slippage, try and stop slippage. I don't think it's going to make a massive difference. It can do. So what I'm going to do is I'm going to recode this today so that it does enter, but it doesn't use a stop loss, and it recalculates the stop loss from wherever it gets the order fill rather than going opposite side. So I'm going to try that out. But basically, I've missed that today because the candle closed too low there. Then it gapped up, see? So I actually had plenty of distance, which I should have got the trade on. Anyway, this is what experiments are all about. So your pre-market opening range, if you took it, depending where you got filled, is there. 1.5R is the gap fill, or 2R is the gap fill. So it looks like it's going to run for the gap fill straight away. But we'll see where we go. So downside targets today. Obviously, we had a big day yesterday. So yesterday's move was 233 off of a 140 ADR. So that's 100 and I think we got to 175 ADR yesterday, if memory serves right. I can't quite remember. But yeah, that was a 175-ish ADR move to the downside. We've pulled back on the FOMC news over 50% of that move. So if this is a structure break to the downside, we'll be looking at a run down underneath the lows today, but that's a long way. So we've got to do 125 ADR just to get back down to those lows. So it's going to need a big day put in. So don't forget, today we've got the euro coming at 115 and then the press conference at 145. If the euro screams to the upside, this will probably get pushed down. If it goes to the downside, it will probably get pushed up. It is going to depend on what happens with stock movement as well, but typically you get the inverse reaction. So we could well see a big 150 plus ADR day again today. We'll see. This yesterday, if you look at what happened with the US stocks before FOMC yesterday, yeah, the US stocks virtually did nothing. Yeah. So that tells me that this move on the DAX is kind of preparation for today's move. I think they were piling out of stocks in preparation for the euro rate announcement to buy the stocks back at a cheaper price. So it may be that we get a rally back today, but we'll see. So at the moment, obviously, we're not going very far at all. So what I'll do is I'll take the 5-minute opening range, I think, today, and see if we can get a run. But I have a feeling we might get a little bit of that today until the rate announcement. I'm not sure they're going to want to put a lot of money into stock purchasing ahead of the ECB rate announcement. So we will see. We'll see where it goes. But so far, if you're taking the pre-market breaks, you are short. It's high probability we're going to get the gap fill, I think, today. That looks pretty obvious to me, which is a 2R return on your pre-market. So fairly easy trade if you took it. An upside, obviously, you're looking from where we are right now, you're looking at 95 roughly up to the weekly high. So that's about 3/4 of an ADR, roughly, something like that, just over half an ADR, all the way up to that high. And then you're likely to find resistance up there if we get there. But at the moment, we're going short. Right. So there's no ADRs so far today. Wouldn't expect them. Not today, because it's ECB. And we had all the move off the FOMC yesterday, and we're waiting for Japan tomorrow. So the Asian session, pretty quiet because we're waiting for the Japanese news tomorrow morning to come through. So no ADRs to look at today. RSIs are flat as well. Yeah. So again, FOMC yesterday did virtually nothing. We did get a drop on the, so US dollar Swiss dropped, US dollar CAD rallied and then dropped back down again. US dollar yen, a little bit of downward movement on that one. Euro US dollar. So we had a big spike up at the end for FOMC. But if you look at the actual movement that we got yesterday, that's 67 pips, 69 ADR. So for FOMC to not take the Euro US dollar beyond ADR just shows you that the market was not interested at all in what happened yesterday with the Fed. So it doesn't give us any clues, bullish or bearish, really moving forward. It gives us a little bit more clue, I think, as to neutral to bearish, but certainly they're not bullish about the US dollar, are they, at the moment? So RSIs are flat because we're not going anywhere. We've been waiting and preparing for FOMC, and at FOMC, we literally got no response. So we're flat at the moment. We need to wait for the market to give us some clues as to which direction it's going to go, because we can't tell. We'll wait for it to get there, and then we'll get on those pullbacks. So no RSIs to look at on the hourly. The only things we've got extended on 4 hour are Euro Swiss, which we know. We went into an accumulation on that one yesterday after the big drop down. So that's a 4 hour RSI extension. We're in little embedded down there. And we've got the Euro Pound, which is extended to the downside as well on the 4 hour. Again, nice potential pullback on this. But what happens today is 100% down to 115 when we get the interest rate announcement for the euro. So looking at where we are with the fundamentals on the euro, we're at 4. We are forecasting a 4.25. I don't think there's any reason why we won't get a 4.25. So the market has already factored that in. So the result shouldn't really make the market move particularly, unless they come out with a 4 or a 4.5, then it will massively move. Otherwise, if we get that 4.25, we'll be waiting to 145 for Lagarde to come out and tell us what's going to happen. So inflation figures are at 5.5, still far too high. The US are still at 3. They're not forecasting a drop to 2% until somewhere in 2025. It gives you an idea how long it takes for them to get down. What happens with inflation when it drops is you tend to get a fast drop, and then the rate of descent slows dramatically. So although it looks like they're at 3 and their target's 2 and they're very close to getting to it, that minus 1.1 will drop down to like 0.1s, 0.2s, and it will take a good year or so to get that other percent off. These are far, far, far too high, but they will also come down a lot faster. So there's no reason why we shouldn't be looking for bullish moves on the euro today, assuming Lagarde doesn't say we're happy with it. And if she does, she's nuts. But I suspect she will come out and say there's another couple of interest rates coming, and that will rally the euro and the Swiss franc. So those are your only RSIs to look at today. So nothing of excitement at all there. There's your 5-minute opening range. We got the gap fill done on the ORB. So if you took the ORB short today, well done. The pre-market, that is. So your pre-market opening range break, depending where you got filled, you've got 1.5 hour. If you got slipped a little bit on it, you shouldn't have got slipped on that because it gapped up. So you should have actually got a proper fill on that. So you should have had a 1.5 hour on that. Pulling back at the moment from the gap fill. So now we'll see where the market's going to go. I think I should be filled short on that. I'm not in. Opening range breakout skipped. Conditions not right. Opening range size is 42. 28. Yeah, it's too big. Yeah, range is too big today. 42, that's over a quarter of an ADR. Again, big open. I'm not taking it today. Just look at the US indices. So I'm also trading the Dow. So I have just taken a short on the Dow. See if I can get a rally off of this, because this is moving enough and slowly and orderly enough to make some decent money with some high contract sizing. So I'm going to try a short on the Dow. I've also got a pending here. So I'm short from there. And I will flip long if it does that. So if we get, I might get whipsawed on it, don't know. But if we do get, you know, one of these nice slow orderlies on the Dow as well, I'm going to take that one today. Just on the other account, not on this one. But certainly running short. Right, let's look at the news. So crude oil inventories yesterday came out, and we got a slight bullish reaction to it. Nothing really big off the inventories. So we had a little bit of a rally up into this area up at yesterday's previous day's highs, and then rejected back down again, but we didn't go anywhere. So oil stuck sideways yesterday. That was the final up day. So this is the first pause day we've had. So the candle there on oil looks like that. Yeah, total pause candle, which quite often will come before a pullback. So if you look at it on the daily, we've got a spinning top. Yeah, and spinning tops tend to be either or, a reversal pattern. So they're part of a 3-bar reversal pattern, or they are a continuation pattern. Pause, continue. So if we're going to continue, obviously look for a break of the high, and you can basically take a break of the high today on oil. But I'm kind of more of the opinion at the moment that we need a little bit of a pullback on this, because this thing's been rallying like crazy. I think it needs a rest before it rallies, but don't know. So I'm waiting for a pullback into this area here. That high, that high, that high, that sort of zone. I'm looking for a pullback into here, which is a good 125 ADR from where we are, this propulsion gap. If we can get into there, I think I'd like to take a long on that. But at the moment, it's just not going anywhere, is it? So tricky oil. But looking at the reaction we've had off of the US dollar, obviously everything seems to have rallied a little bit against the US, which would indicate that the US is weak, which would indicate the Canadian dollar will probably weaken as well. If oil comes down as well with that, that would be a perfect opportunity to take that long. So I get the feeling we might get a pullback on it, but if it does break that high oil, I think you might get a nice run today, because obviously there's nowhere for it to go as well. So right, so let's catch up on the news. So FOMC yesterday, we had the Bank of Canada. Governing Council encouraged by the drop in CPI, but core inflation measures suggest a return to 2% will take longer than previously forecast. Governing Council was concerned progress towards price stability could stall. Inflation could even rise again to the upside. So more upside basically for Canadian dollar. Again, we know they're going above. They need another interest rate rise. So that's not really a shock. Just more bullish CAD. Right, so there's your interest rate decision, 5.5 forecast. So just going to run through the Fed comments quickly. Context, additional firming and curb inflation. Continue to assess. Recent indicators suggest the economic activity has been expanding and whatever. Yeah, whatever. Unanimous vote basically for the interest rate rise, which we kind of knew. Right, so September hike forecast 18%, 36% in November. So we're forecasting probably no hike next month, and then a hike the month after, which I did see Powell say. There we go. So we haven't made a decision to hike every other meeting. So the fact that they said that means that they've discussed that. And the fact that the market has factored that in means that's probably what's going to happen. So what we're going to find is we've had the increase. We're going to have a pause next, then an increase, then a pause, and then a reassessment. So this is basically what I was saying about yesterday and what we look for in all these statements. We look for forward guidance. The market factors in what the interest rate is predicted to be at the next meeting, and it will move the market in that direction. So if it anticipates interest rates rising, you tend to get a bullish run on the currency. And then when you get that interest rate, if it isn't what they are expecting, you get a collapse. And if it's more than they're expecting, you get a pump because they didn't move far enough with the currency. So this is what the market is looking for. The clues in the statement and the questioning of FOMC and the questioning of Lagarde this afternoon in the press conference as to what are you going to be doing for the next month to 3 months? Well, should we be buying your currency or should we be selling your currency? Obviously, it's in their interest to pump it and dump it, depending on whether they want to pump or dump their economy, depending if it's going too fast or too slow. It's all a balancing act. So this is basically saying we anticipate more interest rate rises, but we are going to do it very slowly and incrementally and look at obviously what the data is, which they can now do because their inflation rate is down at 3%. So it's possible we'd raise in September if the data warrants. If that interest rate hasn't gone down anymore, and if it's ever so slightly gone up, we're definitely going to get a rate hike. So which is why what I've been saying, it's kind of more of that stroke that, not bullish, not massively bullish. It's kind of neutral to bearish, more, I think, on the side of neutrality. So there's no strength or weakness specifically in the US dollar moving forward. And therefore, I think the market's probably going to do very much the same. We're kind of back to business as usual before COVID. Yeah, stock markets are starting to rally. Everything's starting to go back into a nice, calm movement. The US dollar isn't massively bullish. It's not massively bearish. It's usually quite okay, strong. You can rely on it type thing. So we're going back into that sort of stance, I think, is what they're trying to say with the US dollar. Still a lot of uncertainty, which we know about. And it's a case, it's always the same. We're not going to tell you what we're going to do because we don't know what we're going to do. That's basically the same as all the banks are saying at the moment. This is the comment I said about earlier. I don't see inflation back to 2% until 2025. We're at 3% inflation. The target is 2%, right? That's only 1%. And he's saying we're going to have at least 18 months before we get there. So those drops we've seen where we've been dropping by 1%, 1%, 0.5%, that sort of thing. To get from 3 to 2, you'd imagine, yeah, we'll be done that in 3 weeks or 3 months. It's not going to happen. It slows dramatically. So what we're seeing now is a curvature going like that with the inflation, and you'll see a curvature go like that with interest rates. And then as that starts to topple over the top, the US dollar will weaken. So we're flattening out, can't go any higher, sort of coming down. So long-term view, medium to bearish, I think. We just had some UK news as well. We worry about the Bank of England risks overdoing the inflation fight. We worry the Bank of England risks overdoing the inflation fight. We believe that rate hikes should slow. Oh, okay, fine. So again, this is what I've said about in here before. What the UK Treasury is saying is with these interest rates, if you keep hiking, so we're going 5.75 is our forecast terminal rate in the UK. Okay. If we go too high, too fast with interest rates, the rate of inflation will drop too fast and too hard, and you will overshoot that 2% target. It's like a car or a lorry or a tanker on the sea, right? When you want to stop a tanker, when you're going into port, you put the brakes on 2 miles before you get there because it takes absolutely ages to stop. And if you want to turn it, it takes about a mile to turn. The same with this. If you hike this and accelerate too hard with your interest rates, inflation comes down too fast. If you then drop this, that rate of inflation drop doesn't just go, okay, we stop. It slowly stops. So what they're all trying to do is get 2%. 2% is deemed worldwide as a healthy economy. You get slow inflation, your GDP rises, your unemployment stays stable, you don't need to put interest rates up, everybody's happy, everybody's rich, and everything's working. That's what everybody wants. No one's got that at the moment, obviously, because of COVID. Some of them are overshot it. Some of them are absolutely miles behind it. Pound, obviously, thus. So what they're saying is they don't want to see 0.5% increases in this because they think that this will come down too fast. And what we'll do is we'll overshoot it and cause the opposite problem. I get far too rich. I start buying bigger houses. The housing market goes up too much. And then the rich get too rich and the poor get too poor and it all becomes unstable again. So they're just trying to keep everything level. So we're having a slowdown in the pound interest rate rises, but we have still got a lot of room to go. So that UK Treasury comment is basically saying what we anticipated was we were going to 6.25 terminal rate. They've decided now 5.75. They're backing that, basically, is all they're saying. So the long and the short of everything that's happened yesterday and what's happened this morning is US dollar, neutral, slightly bearish. Pound at the moment, bullish. Euro and Swiss will obviously find out this afternoon, but likely bullish. So FOMC yesterday, as you can see from what the market made of it, not impressed, not interested. Business as usual. So going forward, any negative news we get on the US dollar, you will probably find it has a fast, hard negative reaction so we can sell the crap out of it. Any positive news we get on the US dollar, you'll probably find you get a little bit of a spike and then an ever such a slight incline waiting for the next negative news where it tanks. So as you can see, with things like the euro US dollar, this is the negative news. These are the things that we're doing. So you get these sustained negative runs. There's no trend. There is a trend, but look at it. It's like that. Yeah, which is great for position trading because as long as it carries on doing that, it doesn't matter. As here, yeah, if you get in short and it's wrong, doesn't matter. You're going to get that US dollar collapse at some point or rally, either or, the other way around. But that's going to help you out. So pound US dollar, it's less pronounced because the pound is massively bullish at the moment. So moving forward, there's not really any help from FOMC at all yesterday. It's just neutral. So looking at where we are today with opportunities, obviously it's Euro Swiss and Euro Pound. Euro Swiss, I'm already in. Everything I've got on is pretty much where it was yesterday, as you would expect. So everything is flat, pretty much flat, break even, apart from the Euro Swiss. That's the only thing that I've got in a little bit of drawdown at the minute. And I've got an aggressive position on that to hopefully benefit from the news. We've had this massive drop on this Euro Swiss. So I'm really hoping Lagarde rallies the Euro today and we get that pullback started because the market is ready to buy this thing. It's just not able to get a kickstart. It just needs that kick from something in the news to give them a positive stance. So we'll see where we go with that one this afternoon. But apart from that, there's not a lot else to look at really today. It's all flat, waiting for the news again, which is the way it always goes. Morning, Martin. Morning, Outro. Morning, Day Trader FX. Evans. Do you know why there isn't a gap on my DAX chart? Because your broker fills that gap with crap, basically. So that's where the Frankfurt exchange closed. That's where the Frankfurt exchange opened. Your broker will have filled this with data. So if you look at another broker, I haven't got another chart I can show you the DAX on open at all. You'll basically have pre-market data, basically. So it doesn't matter if you take this time here, which is basically it's 11 o'clock, basically 11 p.m., which is on my broker time, which is 9 p.m. UK. I don't know what that is your time, but it's 10 o'clock in Europe. It's all very confusing. But any time from around about 11 o'clock on your broker time to 7 a.m. your broker time in the UK, just draw a little line from there and draw a little line from there. And if those lines are not in the same place, there's a gap. Your broker fills that in with pre-market information. Morning, great. So looking at the stocks today. So yesterday we had loads of stocks after market. So we had all this lot pre-market yesterday. We had Facebook after market. What did Facebook do? Let's have a quick look. What did we get from Facebook? Better than expected. Optimistic guidance for the third quarter. 11% jump in revenue. Okay, so all good for Meta. That's the only aftermarket that's been announced for so far, and Chipotle. So this morning, pre-market, we've got Willis, Takeda. So these are farmers. McDonald's, Bristol Myers. There's nothing exciting at all there. So that lot, nothing much. So it's positive Meta. Is the only one really after market. So that's NASDAQ. NASDAQ had a bit of a jump at the open. So we've had a bit of a, obviously, the Globex session is buying, obviously, Facebook. So bullish US stocks based on that Meta move, but nothing particularly exciting. So for this afternoon, potentially we might get a little bit more bullish activity. Aftermarket today, we've got Intel and Roku and Ford are the main players. And then before the open tomorrow, we've got that lot. So oil, basically, and energy tomorrow. Oil and energy day. So yeah, might get a decent move this afternoon again. So we'll see what happens. So your DAX basically isn't going anywhere off of the open. There's your open. You've broken short on the 5-minute ORB. It's obviously looking short at the moment. So this looks like a good sell right now where we are. But yeah, that's it really for today. This morning anyway, not a lot else. If anybody's got anything they want to look at, let me know. But as I say, there's nothing set up. There's literally nothing from a mean reversion perspective that I'm not in. I'm in everything, and nothing's really gone far enough at all at the moment to get anywhere, because we've had news all week, which we've been waiting for, and it's not doing anything. Euro US dollar is moving up nicely. So the H1M5 mean reversion on the Euro US dollar is doing well. So that was the first entry on the H1 extension 5-minute reversal alert. Second entry scaling was there. Done a drawdown control on it on Monday, and that's pushing up nicely now. So my TPs are there. I'm just going to move this. Right, so this is something we need to do. So moving my TPs on Euro US dollar up to 175 ADR. So before 115, I will look at everything we've got open, which is Euro exposed and Swiss franc exposed, and bank anything like that is profitable and put it there. And TPs, you just want to keep your TPs really nice and far away. Assume that we're going to get a big move. Assume that we're going to get 150, 200 ADR moves off the news. If we get them, we get them. If we don't, we don't. But if we do get them, don't put your TP at ADR. If it is going to go, take the money, take the big runs. Let it pay you a big amount rather than a small amount. Yeah. Also, obviously, if you want to hold everything, like for this euro US dollar, for example, I'm 0.1 in profit right now. Let's say the news is coming out in 10 minutes time. You can break even all your positions above break even, and then you might break even on it, in which case you lose nothing, but you might make an absolute fortune. Your decision, your choice. It's all going to be based on how your month's going, how your week's going, and what your drawdown is. So make your own decisions on those. But yeah, pound possibly as well may get a rally or a dump with the euro. They sometimes will move together as well off of the euro news. So be prepared for a little bit of movement on all Europeans. So euro, Swiss, and pound. But I'm hoping for a rally, basically. I'm long euro. So hoping for some a nice rate announcement rise, and yeah, off we go from there. That'd be lovely. The Dow is just breaking those highs, so I'm just about to flip long on the Dow. Right. Gordy, GU. So US dollar obviously is, I'm long on this at the moment. So yesterday I took that one off. So this one basically was, initial entry was on the H1 RSI extension there. Second scale in. I took that off ahead of FOMC because it's obviously US dollar exposure, just in case the US dollar went crazy upside and this tanked. I could obviously add it on again. However, the US dollar is obviously weakened, so this one's pushing up. So the second position is now in profit. I've got my TP here, which is outside of this propulsion gap. So the TP there is 90 pips, which is roughly an ADR. ADR is 100, so it's just under an ADR. So I'm anticipating basically potentially an ADR hit today, running into that accumulation. I'm going to watch when we get to ADR, if we get to ADR. What I don't want is a load of sell orders to step in here. So I'm just going to keep an eye on this. But I think there's every chance now with what happened with FOMC yesterday that we'll have that dollar potentially weaken for a little bit or just not have a lot of strength. In which case, the pound being bullish as it is, should be able to, if the dollar remains neutral, push. So we should get pound US dollar pushing up. So obviously entries were back here. If you want to take a short, you can do when you get extension. I don't think it will come straight down from an RSI extension. I think we'll probably have a grind on it. But yeah, longs on that. Long term is massively bullish. Obviously, pound is much stronger than the US at the minute. And there's no reason now after FOMC yesterday why it should be changed. This is exactly the same. The only thing that we are waiting for, which might put a spanner in the works, is we haven't heard from Bailey since we had the CPI drop. So Bailey hasn't come out and mentioned anything about that CPI figure being worse than the forecast, or better than the forecast, depending which way you're looking at it, whether you're looking at it from a currency perspective or from a living in the UK perspective. But it was lower than they were forecasting. So that helps to remove interest rate pressures, which is what the news was this morning from the UK Treasury. They're saying basically, hey, our CPI was smaller than we were anticipating. Therefore, you don't need to put your interest rates up, do you, Bank of England? Otherwise, you might go too far too hard. And basically, that means slightly less bullish on the pound, but still bullish. We've still got another 0.75%. but we're waiting for Bailey to say something. So since we had the news last week, what typically happens after you get an unexpected news event like we had with the pound CPI, you get the Bank of England in this case, or the Fed, or whoever it may be, coming out and commenting on it and saying, wow, aren't we doing a fantastic job? We're doing better than we thought we were doing. It's come down better than expected. So therefore, this is what we foresee. We've had nothing from Bailey. He's not been scheduled to speak anywhere, and he's not come out voluntarily and said anything. So there is a possibility that when Bailey comes out, he will slightly weaken the pound. But I don't know. So, but long on the pound US at the minute. Dow's just broken out of that high, so I'm flip long on the Dow. And very nicely in profit I am too. But I have just made a loss, obviously, so got to get that back first. Target on the Dow, yesterday's high. Very simple trade. In, next resistance, out. Leon, hi, new here. Any reason why you chose those specific FX pairs? I trade all FX pairs, Leon. Every pair, every single pair. Monitor every FX pair. If you want to know how I trade, go and watch. There's a link going along the bottom. Loads of links going along the bottom, but there's one to the Bootcamp. So go and watch the Bootcamp. It's on the website. It's all free under free trading education. There's links going into, should be links going into chat as well. No links going into chat, is there? That's not working for some reason. Look at why that's not working. But go and look at the Bootcamp. There's the Bootcamp. Go and watch that. That teaches you exactly how I trade, basically. So how I make this lovely green thing down here. EuroCAD. So I got one long on EuroCAD at the moment. Same thing as the pound US dollar yesterday. So I took one off yesterday. So the initial entry was on the H1 RSI extension M5 entry with the EA. We pushed up, pulled back down again. Second entry. I took that one off yesterday because it was obviously against the Canadian dollar. And the Canadian dollar rallies obviously and dumps with the US, but we got virtually nothing off the CAD yesterday. So the US movement really didn't affect the CAD at all yesterday. Kind of coming out of sync. They're separating themselves because the Canadian situation obviously is very, very different with interest rates and inflation than the US. Yeah, took one off yesterday. So still have the one position on at the moment. And obviously you can see my TP is there. However, same with the other one. I'll be moving that up. I don't really know where to put it. That's the thing. I think probably that propulsion gap there is the obvious spot. That is a decent support level. It's not a great support level at all, really, but it's, I guess, that level there. Look. That propulsion gap really is your target upside 150. So once we break this propulsion gap, if the news is positive, we're going to find potentially sellers sitting in these levels here. Certainly there we will. So yeah, I'll be out up there on that second position, which is 95 pips, which is again an ADR. But you know, it's nothing's set up at all at the minute because we're in news week, so it's, and nothing's moved off the news, is it yet? Just flat as a pancake. Tom, are comments turned off for anyone else in the live? Nope. Henna's, help. Have you heard of a prop firm not paying out as they deem trades taken by EA as copy traders and other traders entering at the same time? Someone mentioned it in the Telegram group the other day about, but they couldn't tell me which prop firm it was. So I have heard about it, yeah. But you've just got to prove that it's not copying. You're not copy trading. So argue with them if they're not going to pay out. If it's not in their terms and conditions. Next step, MSM Solutions. What's that mean, Hennes? Next step, is that the name of the prop firm, is it? I've never heard of them. So basically, kick them into touch if they're mucking about and doing things like that. Check the terms and conditions. Any reason I don't recommend FTMO? I do recommend FTMO. I just don't use them. They're one of the top firms. So on my list of trader funding on the website. Why did that not open new? Press the wrong button. So yeah, FTMO are in my list. Nothing wrong with them. Nothing, but I mean, you know, they're all, like I said, I say this every day in here. If you stick with all these guys, you'll be fine. Just use one of them. I use EA and my Forex funds. No one can explain to me any reason on the world, in this universe, not to use E8 or my Forex funds. They have the best conditions. They allow EAs. You can trade through the news. You can do what the hell you like. They pay you out fast. They're cheap. They turn over 22 million a month. They're massive. They've got thousands of funded traders. Unless someone can come up with a good reason why these guys shouldn't be used, I'm going to carry on using them. No one can come up with anything that tells me that there's any firm out there better than my Forex funds. So just use them. I get paid by them. I use my EAs. Other people use my EAs, and I get paid. They've never mentioned anything. It's not in the terms and conditions that says I can't use an EA. Use them. Stop going to other firms. I'd say it when I'm blue in the face. I'll probably be saying it in 20 years' time in here. Just, it's like, I used the analogy, same analogy yesterday, right? Why don't you buy from Amazon? Right? There's no one on this planet that can argue to me that there is a reason to buy from any other company in this world than Amazon, because Amazon give me the best price available on the internet. It's checked every minute, right? So I get the best price. It's delivered to me this afternoon or tomorrow, free of charge. Yeah. If I don't like it, I tell them I want to send it back, fill out a form, press a button, and they refund the money before I even take the parcel to the shop to send it back. Why would I buy anything on the planet from anywhere else than Amazon? My Forex funds are the Amazon of prop firms. Prove me wrong. If you can't, stop using other prop firms and recommending other prop firms and saying, have I heard of these other prop firms that don't pay out? I tell you every day in here, use my Forex funds. There's no other reason not to. Or E8 or FTMO. Anybody on this list, they've all been around for years, are multi-million turnover a month organizations with tens of thousands of funded traders. All these prop firms keep propping up as run by 8cap and all these other people. And people say, have you heard of this one? Have you heard of this one? No, because I don't need to. I've got a list of 15 of them here that are all absolutely amazing and have been amazing for 2 to 3 years plus. Why would I bother going anywhere else? It's nuts. Stop it. Just use one of them. There you go. Here's a link. Filter, right? The whole purpose I built this was, like you just said, I want to use EAs. Okay, so you go, EAs allowed. Yes. It's filtered a few of them out. I don't want to use a stop loss. Stops required? No. It's filtered a few of them out. I want to hold over the weekend. All of them do that. I want to trade over the news. All of them do that. I want a decent leverage of a minimum of 100 to 1. Filtered a few of them out. So who are you left with? Ta-da! My Forex funds and E8. You can't beat them. You cannot beat them. Just use them. Or tell me why you shouldn't. I don't mind being proven wrong. And if you can find a better one, I will happily add them to the list. But no one's come up with one yet. You can even martingale. You can. You've got to be careful with martingale. What you need to do with all prop firms, my Forex funds included, get it in writing. It doesn't take a minute to send them an email saying, hi, this is how I trade. Is this okay? Right? So the definition of martingale varies in prop firms, and you need to check this. So martingale, the official definition of martingale is taking a trade with one lot, then taking a trade with two lots, then 4, then 8, then 16. You double it every time you take a trade. That's martingale. Using a lot multiplication loss recovery system is different. So for me, for example, with the market reversal alerts EA, I take a 1, I take a 1.3, and then I add 1.3 times 1.3 to give me 1.6 something. And then it goes up from there. So I'm using an ever such a slight increment as the swing progresses. Yeah. Not martingale. But some companies deem martingale as taking a trade after your initial trade, which is of any value higher than the original. So if you take a 1 and then you take a 1.01, virtually the same, you accidentally press the up button on the scroller on the wheel when you were placing the trade and you accidentally put a 0.1 in, account blown. So check what their definition is. Very different. But again, if you want to use a prop fund that allows you to do that, use my Forex. My Forex funds don't care, right? The business model of my Forex funds, and I've explained this before, is evaluations. They make 20 million plus a month on people paying for demo accounts. Some of them pass and trade the demo account they give you when you're funded up to a level where they can withdraw money from. It's never more than 20 million. So whatever they pay out to the traders that actually manage to have a lucky run and get to payday doesn't exceed that. So what they do is they make that, they pay out that, and they keep the difference. Whatever it may be, I'm making numbers up, but they keep the difference. They couldn't give a monkeys how you do it, what you do. Really couldn't give a monkeys. Because that's the way the trading works. Yeah, they set limits and rules that mean that even the best person in the world, the best trader in the world, is going to blow their account at some point. So they don't care. Do what you like. Go martingale. I don't give a crap. You have 3 months worth of lucky martingale and take 25 grand out of us. Good for you. We have only made 19 million off of everybody that tried it and failed. That's the business model. So just pick one that doesn't have stupid rules. I've been through this so many times. Is that my Forex funds that you're recommending? It certainly is, Lens. And to support local businesses and friends. Yes, that is a reason to buy from a local shop. Yes. However, for me personally, the fact that I have to get in my car, drive to the local shop, and then pay more, I don't care if they're a friend. I'd rather keep my money in my pocket. I'm just nasty. EA in my Forex funds. Are you okay to use copy trading from other accounts? Yeah. Read the rules headers, right? If you've got any questions, these prop firms, right? My Forex funds, go to my Forex funds on their website. There's FAQs, there's insights, there's everything you need to know. There's a chat, right? You can go to their Discord channel. What I would recommend, and this is the best thing to do, is to go into Discord, ask the question, get clarification from a moderator in Discord, screenshot, save. If you ever have a problem, you go and, hang on a minute, your support guys told me this. Send them a screenshot. It will be in Discord. It will still be in Discord when you have the problem. Clarify it. Clarify it with 2 different support people and get the same response. You're 100% guaranteed. You're fine. Yeah. People have got to take ownership of this. You know, when someone says, I didn't get paid out because they deemed me as copy trading, then you read the contract and it says you're not allowed to use EAs for copy trading. It's like, well, God's sake, man, read the contract. It says in the contract what you can and can't do very, very clearly. They're as straight as you can get. What EA do you use for my Forex funds? Any EA I like. Price Action Toolkit. ORB EA is the main one I use. Market Reversal Alerts EA. I've used that as well for taking support and resistance trades. So when something gets to support and resistance, so let's say, for example, price trades up to here, and we get to there, and I think I like the look of that short, I'll stick the Market Reversal Alerts EA on, say, and tell it to take the next short and put half an ADR stop on it for me as a support and resistance bounce. Use any EA you like. Trading's trading. You just got to, you know, find a firm that fits. That's the thing with prop. Which program did you start with my Forex funds? Just evaluation. So just the normal evaluation. 100Ks and 50Ks is all I do. $300 and $500, cheapest on the market. Plus, if you fail one, which I do regularly, yeah, the second time you take it, you get 10% discount as well. So you never actually pay $499. I just pay the retest fee for each one. It's even cheaper than the website. When it's a business like this, yeah, the only cost of doing business I have in prop is that. There are no other costs. So again, I'll use the Amazon analogy. Why would I go to another company that charges me $550 for a 100K evaluation account with exactly the same rules when I can get one here for $499? Every 10 evaluations I take, I save myself $500. That's an evaluation free. It's a free 100K account every time I do 10 of them. Yeah, just use your brains basically when you're picking these props. They're all the same. Michael, I got it in writing for your position trading. I told them exactly what I wanted to do and they said it was fine. Yeah. Get it in writing. Any copy traders I recommend? Yeah. So I use FX Blue. Actually, well, if you want to use a copy trader, I don't really use copy traders. I used to. I don't like over leveraging on one strategy. So if you're going to copy trade from one account to another, what you're doing is doubling your risk. Why not just have one account and double the risk? See what I mean? If you take two accounts side by side and you copy the trades from one to the other, all you're doing is doubling your exposure. That's nuts. Why would you do that? Just no point. Why not just run one account and instead of going with 1% risk, use 2% risk? It's exactly the same thing as taking 1% risk there and 1% risk there. Take 2% risk there. It's just easier. But if you want a copy trader, FX Blue, personal trade copier. It's just an EA. It's free. Download it. You set it up, one as a master, one as a slave on the same machine, and it will just copy the trades between the two. It's free. I'll send the link. Thoughts on how to pass prop firm for sure? There isn't a way to pass a prop firm for sure. Gordy, think about what you're asking. Is there a way to guarantee passing a prop evaluation? If there was, do you think I would be blowing accounts? Do you not think I would just do that? There was a way to pass a prop firm for sure. Not possible, is it? And if there was, I certainly wouldn't tell you. I'd just be a multi-billionaire, wouldn't I? If there was a way to guarantee that I would pass every single prop firm evaluation that I took and then take the funded accounts up to whatever level I wanted to, I wouldn't be sitting here, would I? I'd just be doing it. The market is random. I'm long on the Dow at the moment. I'm currently sitting in $550 of profit. Is this going to go here or here? I don't know. I knew that, I would act accordingly. If I knew it was going to go to that high, I'd put 25 contracts on instead of 10 contracts. But I don't know. I knew that, I would pass an evaluation this morning, wouldn't I? Wonder when they will offer discounts on their evaluation account, just like Apex did. Well, Apex is futures. That's a totally different thing. They won't do that. Apex's business model is different. Apex is set up to fail you. If you want to use, right, so if you're going to go futures route, Lens, I would actually recommend Top Step, because Top Step their rules are the best in the industry. Their costs and their payouts aren't as good as others, but their rules for passing evaluations are second to none. No one can touch them. There's two main differences with Top Step over Take Profit Trader and Apex. Take Profit Trader are my kind of go-to, but Top Step have just overtaken them, and I'm now on Top Step. I've flipped over to Top Step and I'm using them now. And the reason is, on a 100K account, which I've got running at the moment, I have a 2K max loss limit. Okay. That is calculated from the open of the day, right? So whatever my P&L is there, I can go down by 2K. That's it. With all other firms, when you hit that level, they fail you. The difference with Top Step is when you hit that level, they close your trades and go, stop it. Stop trading. You can't do any more today. Come back tomorrow, right? And try again. You don't lose the account. And that is a massive difference. If you have a max loss day with Top Step, you don't lose the account. They just tell you to stop, think, calm down, come back tomorrow because you're crap today. And that's exactly what you should be doing. That's responsible trading. The other thing is if I run the account up by 2K and then I pull it all the way back down to break even, I still have 2K of drawdown available for the day. With other firms like Apex and Take Profit Trader, if I run up by 2K, my trailing runs up by 2K with me. If I come back down to break even and make no money on that trade, I've blown the account. I've failed. I have to reset. Yeah. With Top Step, doesn't happen. So the rules they've introduced, these two rules, which are the difference between all other futures firms, make your life so much easier. I had a max loss day yesterday, 2K. And basically, I'm still in it. I'm back today. I'm now sitting in $600 of profit on this morning's trade. Yeah. But I didn't blow the account. It's the same account. I'm still trading it. That's a massive difference. If that was Take Profit Trader or Apex, I would have lost it. So why do you think Take Profit Trader and Apex offer you 80% discount? That rule kills 99% of traders literally within a week. Every week you will hit that rule because you'll have a runner, you'll go and make a cup of tea, you'll have come back and you'll have hit that and you'll be out. And then you go, oh, crap, $59 for a reset. Yeah. So what they want you is they want you as a customer, right? And they make money out of your resets. The other firms want you as a customer and they make money out of your evaluations. Yeah, there's a difference between making money out of resets and making money out of the initial money charge. Top Step charge a larger amount up front and a reset fee, but they take less money out of resets because their rules don't blow your account all the time. It's a big advantage. But that's only if you're going the futures route, obviously, because they're futures. And futures is very, very different. In fact, for the opening range breakout, futures is no different at all. This is an ORB trade. Yeah, flip long on the ORB. Yeah. It's the same. It's just obviously traded manually, but with contracts instead of lots. Lens, not based on trading stop. Yeah, exactly. This sounds better. I blew more than 10 evaluations with Apex and Lilu. Yeah, and Lilu are the same. Lilu and Apex are the same company. The back end of Lilu and Apex is the same. It's run on a platform called Member Pro for WordPress. If you look at the back end of Lilu and the back end of Apex, they're identical, different color schemes, the same thing. But you know, they never, again, same thing. They don't fund you. All they do, they provide you with a CME feed, they provide you with Rhythmic, they provide you with NinjaTrader, and they set up rules to make sure you fail as much as possible. They charge you $20, $30 for having a go. $20, $30 per demo account. That's it. That's what the market is. They're charging you for a demo account. If you want to do this yourself, do it yourself. Get yourself a demo account. It's exactly the same as a prop account. When you can pass a demo account with the rules of a proper valuation, then go and buy a proper valuation. But don't buy a proper valuation if you can't do it on demo first, because it's the same thing. You're not paying $500 for a demo account, are you? Big difference. Let's go down. And the other thing about Top Step as well, which they've just changed, is now there is the consistency rule is now 50%, which is fantastic, because I've got a 6K target and I can maximum I can make in a day is 3K. So they cap my upside at 3K, which is fine. I want my upside capped at 3K, because if I hit 3K, I'm stopping and I'm taking it out. But they cap your upside at 3K. So basically you can pass your evaluation in 2 days, and it's only one step, not two. So Top Step are my go-to futures now. If you look on the website, it's actually Take Profit Traders still, but I'm going to change that to Top Step now because they are better. But the thing I like about, and this is the other thing, yeah, they've all got pluses and minuses. Take Profit Trader, I love them because it's instant withdrawals. So if I make $3 on day one, I can go, I'll have that, please. Can't do that with Top Step. I have to wait, and I have to trade for 5 days, which is the downside. You're never going to get the perfect firm. It doesn't exist. They've all got pluses. They've all got minuses. Right. Euro US dollar's going okay. So I might bank that before the Euro news. I'll wait and see where we go today. But the Euro's having a nice little rally against the US at the moment. Euro's not doing too bad against everything, really. Apart from the Swiss franc, great. The only thing I do want it to do well at, and it's not. So we've just taken out yesterday's low on the Euro Swiss. So watch this level for a bounce. We might get a pullback. I reckon this is just going to stay range bound today. So before the news, I've got that 2.5 aggressive drawdown control position on Euro Swiss. If we're up in this propulsion gap, I will break even that, because I don't want it to go. There's no point in taking a full 0.75 loss on it. I'll move the stop up if it's moved up, but that's the only change I think I'm going to make on that today. Unknown someone, any chance of developing a gold strategy? Same as everything else. I don't trade gold because I don't need it. I got 28 Forex pairs and 4 indices. Why do I need gold? It's just another US dollar cross. If you want to trade a US dollar cross, trade the pound US dollar or the euro US dollar. Flip a coin for gold, as Michael just said. Yeah, I mean, it's just a US dollar cross with the odd weird move by gold. It's not. It's the same as everything else. You can either scalp it, which is totally random, obviously, or you can position trade it. But I've just found always position trading gold gets me into trouble because of at the moment, it's an absolute position trader's dream. If I'd have been position trading this thing pretty much this year, I would have absolutely killed it. Couldn't not make money out of it. But that's not the norm for gold. The norm for gold is things like that, which if you're position trading, you know, let's say, for example, you took that short, right? This is why I don't position trade it. A perfect example right here. Short, scale in, may have got out. If not, scale in, scale in, scale in. You would have had to have aggressive drawdown control on to get out of that. And if you didn't, you're still in it. You started this in March. It's May. 2 months. Probably had an out towards the end of May. It just goes into parabolic squeezes is the best way I can describe it. Look at that. That's typical gold. Yeah, you can't position trade that. It's too much. It's too fast, too hard. That's what it does. That's 10 ADR without a profit take. Yeah. Normal movement in FX, the market pushes, profit takes, pushes, profit takes, pushes, profit takes, pushes, profit takes. That's what the market movement does in Forex. In gold, it flag, flag, flag. 10 ADR. You can't survive that. So, and this, if you don't manage to get that exit, you're stuffed. That's 10 ADR. Again, very hard to get in and out of it when it goes like that. And it's kicked me in the butt so many times, I don't trade it. That's the Ukraine war kicking off, I think, isn't it? Yeah. So there's the Ukraine war kicking off. Yeah. Gold. Sanctions being placed on Russia. Yeah, we can't have any more gold out of Russia. Crap. You know, it's just stuff like that happens. It doesn't happen in FX as much at all, really. Sometimes it does, but if you want to scalp it, it hasn't got an open either, so you can't use an opening range breakout strategy because it doesn't have an open. So it's literally just a scalp. Support resistance is the best thing you can do with gold, I think. Take with support resistance bounces from logical areas, yeah. Really, yeah, look, it's a lovely support resistance machine when there's no news going on, but you're just waiting for news. That's what it's waiting for. It sits there and it waits for news with the US dollar. So I got 28 pairs that move orderly, and I've got one thing in front of me that goes nuts every now and again for no reason. It's just no point putting your risk in it. It's not as if I'm short of opportunities, is it? There's opportunities every single day in the FX market. There's no reason for me to take it because it just doesn't agree with me. I had to adjust to the spreads at first with prop. Yeah, well, different spreads have different prop spreads are always a little bit woollier, but yeah, it's just one of those things you've got to deal with. Some are better than others. Everything with 8 cap is bad as well. You know, all these brokers, all these prop firms that are coming out who are 8 cap affiliates, which is basically what they are. You know, the spreads are terrible. And this brings me back to the why use anyone else thing. 8 cap E8s are great, and my Forex funds are great. Position trading with mean reversion on M5 time frame on gold has worked well. Yeah, at the moment. Yeah, it probably will work at the moment, but this is what I'm saying. This is not the norm at the moment for gold. Gold's stuck with the US dollar, and obviously the US dollar has been slightly weakening stroke sideways. When we get a big, strong bias long or short in US dollar, you'll find that gold will suddenly start to get more volatile. The other problem we've got with gold is obviously with the Russian import-export ban and Russia being a over 50% holder of gold, or hoarder now, the supply is restricted in gold. So it's a supply and demand driven instrument because it's used in manufacturing. So it's difficult to tell how to trade it, because as soon as that embargo on Russian gold is released when the war finishes, there'll be an influx of Russian exported gold, which is going to make this thing go back to silly volatility again. I think that Russia hold a lot of sway with this, which is why you get these volatile moves, because they can move the market a lot because they hold a lot of gold. And obviously, since we've had Ukraine war and the cap has been in place, it's become a little bit more stable, I think, but it still does these nutty things, you know. It just, look at that, from there to there. You're position trading that, you're stuffed. It hurts. It just really hurts you. I think it's because it's a trender, you know. Lovely there. Look, if you position traded it from there to there, you could not have not made money apart from that black swan, in which case you'd have died. But you know, I don't know. I just don't trade it. But I treat it like any other US dollar cross, because that's what it is. It's XAU US dollar. It's a US dollar cross in exactly the same way as the euro US dollar cross. It's just a US dollar cross, but it's got its own life. DAX is going, is it? Oh yeah, so DAX has flipped to the upside. We're up at resistance now. Not on the DAX this morning. So the ORB short, so your ORB basically today, depending on which one you took, if you took the pre-market, you basically hit 1.5, probably 2R, which is where you should be taking your money. If you took the 5-minute ORB today, your short has stopped out and you are long. So you are break-even point now at very strong resistance. So watch this level. This is the level we were looking at. These switch platforms. There we go. So this is the level we were looking at on the DAX. Okay, so we're through. So weekly high. So this is pretty much classed as all-time high at the moment, which is exactly where we are, and we're breaking through. So where you are now, there is no upside. Nope, sorry, tell a lie. There is an upside. I'm at the wrong level. Monthly high, last month's high. So this level here is where we've struggled to get through, which we are at again now. So that undoing was the pullback, basically, that they needed to start the rally. So next stop, 225 ADR. Off we go. So there's absolutely no resistance from here all the way up to that high. So if this gets out those highs today, and it would be nice if it was helped along with the US indices, which seem to have stalled a little bit, but if that gets out of those highs and holds, this thing's just going to run. So bear in mind, we're getting up to ADR. So, you know, when you start getting to the 125s, 150s, you're going to start finding a little bit of resistance to go higher, because they'll just run out of stock, basically. But yeah, good breakout today. That's your 15-minute. That's your 5-minute. Whichever one of those you took, we're off. US indices look. Platform not changing. There we go. US indices stalling out. Well, the Dow is stalling out a little bit here. Hopefully this is just a flag. We'll see. Golden roller coaster, yeah. Gold is a roller coaster. You need to identify basically anything that is not making you money and just remove it. Yeah. So that's the only reason I don't trade. I've done a video on it on YouTube. I think it's on the website as well, why I don't trade gold. And it's basically just because I calculated over a period of time, looking at my P&Ls, that I just lost money on gold. So if you remove losses from your P&L, it makes you more profitable by default. Yeah. So if you've got 28 instruments in FX, and year after year after year, 2 of those or 3 of those instruments crop up every single year as being losses, remove them. Don't trade them for a year, and you won't have those losses. And all of a sudden, you're just more profitable by default, aren't you? Because if you can remove the loss, your profit becomes higher. because less of it's being eaten away by loss. So gold was the instrument that I just could not get on with. So remove it. And if you've got one, the only way you can do that is by analyzing your P&L, obviously. But if you've got one, remove it and you'll make more money. Same with oil. I started trading oil and tried to position trade oil and was going okay for a while. And then it went into a very similar move that gold does, and that scared me out of position trading. So when I trade oil now, I literally just trade it with a stop. So I go back to a stop-based strategy with it, which is nothing wrong as long as. But the nice thing about it is when it goes, it's like a 2R, 3R, 4R very easily, oil, because when it goes, and it really goes. Yeah. It's a supply and demand driven product like gold, and it's very easy to trend trade, which is not me. Breakout trading and trend trading is just not my bag. Not my bag. Right, that's all I've got for you this morning. There's nothing else to look at. Everything's flat. We're waiting for 1:15. So I will be back at 2:20 this afternoon for the US session. Obviously, that is going to come on before that. Then we've got the US GDP and unemployment. Then we've got Lagarde. This is the big one, 1:45. So we'll wait and see what Lagarde says, whether she rallies or dumps. Highly likely she's going to rally because they need more interest rate rises. But the market has been declining on the euro over the last few weeks. So it might be the time we get that rally started. So whether we get that sort of move or that sort of move, we'll have to wait and see. But fingers crossed, we should get some bull movement today, hopefully off the euro. But we'll find out. We'll reanalyze that at 2:20 this afternoon when we come back for the US session. We've got a lot of stock activity for the US session. Obviously, we've got Facebook, Quantums, lots of pre-market with McDonald's, etc., and MasterCard. So there should be a decent amount of volume coming through at the open again. So the 5-minute, 15-minute, and if I can get the new version of the EA that I'm developing coded this morning, it's only 9:15. I should be able to. I might try and run that and get rid of those candle too close to the range rules and see if we can get some big moves out of these US dollars, these US indices this afternoon. But so far, decent rallies across the board. So if these will just grind and continue all afternoon, I might not even trade the afternoon session because I will have made all my money this morning. We hit if we hit this high on the Dow today, that's $3,550. So that's me done for the day. Yeah, I'm not going to trade it again today. There's no point. Made it. So we'll see. But that'd be lovely. And that's well within ADR as well. Look. There's absolutely no reason why we can't do that in the Globex session. And then see what happens. But that's futures. That's my cap. I can't trade above that anyway. So right, I will be back this afternoon. If you need anything, I'll be in Telegram. There's a link going past in Telegram, in the bottom to Telegram if you need it. Good luck with the Euro announcement. Remember to bank anything. If you've got any decent amounts of money on any Euro, Swiss, or potentially pound pairs, stick it in there before the news, or at least break even it. Otherwise, you've got an opportunity to lose it. But put it there, realize profit. It's yours. It's in the bank. You can spend it. So just make sure you don't let all your money disappear on a negative news event. So bank it if you need it, or break even it. Just protect it. Yeah, good luck with that. We'll find out how we do this afternoon. So, all right, have a good one. Anything you need, let me know. Otherwise, I will see you this afternoon. If not, tomorrow morning, 7:50, same time for Frankfurt. Have a good day.